Hello fellow option traders, this is Jeff, and this is a special edition update to the Profit Tent portfolio, and today's date is the Sunday after expiration, March 17th, 2013. It's a Sunday after March expiration. It also happens to be St. Patty's Day. Alright, so let's take a look at what happened. This is my paper account, and this is where I was testing out this theory on doing iron condors on these higher volatility underlyings here, like Amazon, CF, Chipotle, MasterCard, and Priceline for last month. And for this month, we are looking at, as soon as I get it over here, for this month we have Amazon, Baidu, CF, MasterCard, Netflix, and Panera Bread. Alright, so last month was fairly successful. I had to bail on half of the CF, so I lost some money on that. But overall, based on what you're seeing here, is a gain of $771.50, not including transaction costs. I'm flipping back here to find out how much you can subtract off of that. For CF, where are you, CF, in my notes? I don't see it. So let's see if we can figure it out here on the account statement. We'll bring up CF here. CF. I'm not sure that this actually tells us, but let's go back here. I think about 7 days. Okay, here's the order. Basically $283. So if you take the 771 and subtract 283, that's about 500 bucks. Again, let me make a note of that. 771.50, and then minus our loss over here. Oops. 283. So that is it. A little bit under 500 bucks. About 490 something, without actually running the exact numbers. So that was a good month as far as I'm concerned. Every one of them worked out just fine. None of them expired in the money except for CF, which I got rid of before it cost me too much. So I'm pretty happy with that. The other thing, and not part of the Profit Tent portfolio, but this covered call that I had on the Qs, the call, it was at 69 strike, and the Qs actually expired at 68.51, or closed at 68.51 on Friday. So we're going to collect the entire credit for that, and that was, and click here and view the trade, collected 70 cents or $1,072, which is just what it added up here to, $1,072. So made some money off of that. Going to do another one. I haven't decided yet exactly where I'm going to do it. I'm probably going to do one out in May so that I can collect around 70 cents again if I move it up $1 more on the strike. So that's probably what I'm going to do. And if it, if it gets called, it gets called. That's the way the cookie crumbles, as they say. All right, let's take a look at the current month, or next month, I guess you might say. This is my live account, and these are actual real live trades that I have in there. These are all iron condors. And this is my sort of insurance policy on IWM. I'm just keeping an eye on that. But this is the Profit Tent portfolio here, and it's already up $194 for the month. But we have a lot of time to go yet. And here's what it looks like on the risk profile. I have April expiration up here for a probability date, so you can see that there's a good probability that it's going to expire within this shaded range here on 4/20. But, you know, we're not at an optimal spot here. We're actually down a little bit. We're a little bit cold on our deltas. So we have some downside risk here. I don't have the insurance policy in here, but when I add the insurance policy, then my risk graph starts to look like this, with a max profit of 467 at 150.89. But what I'm going to do with IWM is just keep an eye on how things are working, and here's what it looks like. This is what IWM looks like right now. It's a double calendar. Looking for the Russell or IWM to move down a little bit, do a correction down here around 150. If that happens, great. If it doesn't, that's great too. We're okay if we don't lose too much volatility in this, which would sink both the white and the red line down lower at this particular price point, and we don't want that to happen. But this video really is about the Profit 10 portfolio, and again, it's looking pretty good. It's a little bit high on the, well, you know, I call it cold. If I was negative delta, I'd have upside risk, and I would say it's running a little hot. But here I'm saying it's below zero from a risk perspective, even though the deltas are positive. But we have downside risk when we have positive delta. But there's not a lot. 17, you know, I've seen them go to 100 or 150 or 200 and then come back. So we will wait and see. Although I would be really excited if we got a market correction, because I'm overall just thinking that when you read stuff and hear things on TV about, oh, you know, people are starting to jump in the market because it's doing so good, you know that it's probably going to correct at that point, because the big guys like to take advantage of the little guys, and when the little guys start to jump in, they're going to rape them. So I suspect that is probably what's going to happen. Okay, so I think that's it. This is a pretty short video. I'm going to also do a blog post so I can hit it from both sides. If you have any questions, feel free to leave comments either on YouTube on the video or on my blog at theoptionguru.com/blog. All right, thank you for watching. Have a great day and happy trading.